Hey, it's Chris Carlin here, masteryourmoneynow.com.au, helping you take control of your finances from the comfort of your own home. What I want to have a discussion with you today, a little bit different this one, is the difference between stepped and level premiums. And this is a particular discussion when it comes to your Plan B. If you don't know what your Plan B is, when we talk about your retirement or building your wealth, we talk about your Plan A, which is if you're able to continue working and able to continue to invest and save and continue on a nice upward trajectory, if things go right. We also want to talk about your Plan B, which is if things go wrong, how do we make sure that you and your family are financially protected if you're unable to work due to injury or illness, or heaven forbid, if you were to pass away. So that's what I want to discuss with you today, because what I hear with a lot of people, especially those under the age of 35, they think they're bulletproof, they think they're fit and healthy, it's not going to happen to them. Why should they take out this insurance cover? And the reason is because they can take, if you're under the age of 35, or any age really, but particularly if you're under the age of 35, how you can take advantage of your young age and to be able to save tens of thousands, if not hundreds of thousands, when it comes to your personal insurances over your lifetime. And the way that works is through stepped or level premiums. So let me explain what I mean by that. When it comes to your personal insurances, let me just draw a graph here. Alrighty. So this is the premiums, and this is your age. So age 25, 35, 45, and 55. Okay? That's a bad 5, but that's not, it is a 5. You know what I'm saying. Okay, so when it comes to your personal insurances, what I'd say probably about 95% of people do is they fund them through what's known as stepped premiums. What that means is they start out cheap, but they get more and more expensive as you get older. Okay? So your premiums kind of work out like this. For say $1 million of life insurance at age 25 is considerably cheaper than $1 million of life insurance at age 55. The other option that you've got, which not many providers offer, but certainly something that I'd have a discussion with anyone under the age of 35, is level premiums. What that means, they start out a bit more expensive, but there's usually a crossover point, usually about say 5 to 7 years, where they become cheaper than the step premiums, and then you get that advantage over the long term. To show you what I mean by this, what I want to do is switch to the computer screen and show you an actual real life practical example of the differences between stepped and level premiums, and show you how you can save over the long term. So, this is a practical example of the differences between stepped and level premiums. Okay, so John is a 25-year-old English teacher at St. Joseph College and earns $80,000 per annum. How much would it cost for $1 million of life and TPD insurance, $100,000 of trauma insurance, and income protection to protect 80% of his income until age 65, assuming he's a non-smoker and has a 90-day waiting period on income protection? Now, I know you've got no idea how much the cost of personal insurance cover is, but just take a guess. How much do you think that cover will be worth at age 25? You got your answers locked in? What about at age 35? Locked in? Age 45, how much do you think that will cost per year? And at age 55, how much do you think that will cost? You got all your answers locked in? Okay, so hopefully you understand that the cost of personal insurance cover increases as you get older under the stepped premium structure. So how much does it actually cost? Let's give you the answers. At age 25, the cost of that cover is $1,500. Okay? At age 35, that goes to $2,000. So I hope you're on the right track there. At age 45, that costs $3,500. Okay? At age 55, how much do you say it was? About $5,000, $6,000? Actually, it costs $13,500. I kid you not. Let me just try and write that. $13,500 it costs to get all this cover at age 55. 0, 0. Okay? That is what the stepped premium line does. It starts out cheap but gets more and more expensive as you get older. Especially at this time when it's when you're most likely to claim. Now, if John came out as a 25-year-old and he came and saw me or someone at Master Your Money Now and we discussed level premiums, we could have got that cover at only $1,800 and it would have remained relatively flat for the rest of his life. Just like that. So the question that you've got to ask yourself is, what line do you want to be on? Do you want to be on the stepped line, which goes up like that, or do you want to be on the level one? Well, there you have it. As you can see, there's certainly some really big goods cost savings by taking out personal insurance cover in your 20s and 30s and taking advantage of your young age so you can save over the long term. If this is something that you want to have a chat about in a bit more detail, go to masteryourmoneynow.com.au, click the Get Started screen and book in your complimentary 30-minute discussion. We can have a bit of a chat about your circumstances and how we can help you to take control of your finances. This is Chris Carlin, masteryourmoneynow.com.au. Make sure you share this video with people that you think can benefit from this on Facebook, YouTube, Instagram and LinkedIn. Have a great week.